everyone, welcome to SatsOverCents. I am Varun, your host, and today we'll be discussing what is DCA all about. Bitcoin price can be a wild roller coaster. One day it's up, the other day it's down. But what if we told you that there is a way around? And the best way to do that is to stack Bitcoin in DCA fashion. Because remember, time in the market beats time in the market.
That is so true. Hi, everyone. This is AJ. We're going to talk about DCA or dollar cost averaging. Varun, why don't you firstly explain what DCA is and why is it such a successful strategy, especially for something like Bitcoin?
To start with, DCA stands for dollar cost averaging. In simple term, it means that you can invest your money, fixed amount of money at regular intervals. Now that intervals is depending on each individual's flexibility. It could be a day, it could be a week, it could be bi-weekly, it could be monthly, quarterly, however you're comfortable. The reason one does that is because it takes away the stress. It takes away guessing, what's the price is going to be. And basically it's about not worrying how the market is doing, right? And why one should do it? Because there are no price swings. There is no FOMO, fear of missing out. Usually, somebody who's just stepping into this Bitcoin world, emotion tends to take over, right? I mean, so it's very important that you start doing dollar cost averaging, wherein you identify a budget for the year. And the best way I would say that there is an example I like to give to all my clients. Let's say you have $1,800, which is your yearly budget. So the best way you can do is you can deposit $5 a day. And now that $5 you can further, spread out in that 24 hours that you have. And at regular intervals, you can just keep putting a dollar at five different intervals. That's how you can do it. With that strategy, you will never be looking at the price. You will never worry what the price is. And the best part is that you're accumulating your wealth because there will always be 21 million Bitcoin, which is a finite asset.
That's a great answer. That is a great answer. And I think, which you rightly said, Varun, that by dollar cost averaging, you remove the emotion from the equation of investing in Bitcoin, right? I think everybody, if especially in the news, mainstream news, media, they talk about the volatility of Bitcoin. Volatility is opportunity in my definition. The reason I say that is, if you're dollar cost averaging, you are buying at your fixed price and fixed levels. When I say fixed price, as in fixed budget. So, for example, in your example, Varun, you were saying, if you have $1,800 to spend in a year on Bitcoin, you can buy $5 worth of Bitcoin every day, right? It could be at 12 noon. Now, think about this. Like, let's really, play out this example that you're buying at every day 12 noon, $5. On Monday, let's say it's $60,000. Tuesday is $70,000. Wednesday is $40,000. Thursday is $80,000. Friday is $100,000. But you have still bought $5 worth of Bitcoin every single day, right? And this is a very higher level example. I'm oversimplifying this, but the point is trajectory or your goal to accumulate and stack Bitcoin is a long term goal. And if that's the case, then dollar cost averaging is the answer. And you make volatility your friend.
Absolutely. Just stick to basics, start small and think long term, like you said.
Great, great. So, on that, can you give us some? I think you kind of touched on some of the benefits of DCA or dollar cost averaging. Can you speak about or can you talk to things that you hear from your friends or people you speak to when you talk about dollar cost averaging?
It takes away the price swings. Emotions are not taking over. You're thinking long term and you have a budget in mind. And usually what happens is people have come back to me and they've actually made it better. They're like during the bear market where the price of Bitcoin is very down, they tend to put in more. But when in the bull market, they tend to reduce the dollar cost averaging amount. And I feel that that's a better strategy. And as in when you also have lump sum, you can do it. But the main thing is, I would say that a lot of people actually they do DCA, but they tend to leave their coins on the exchanges, which I would say that remind yourself that why did you get into Bitcoin in the first place? And the idea is to self-custody your coins. And like they say, not your keys, not your coins. So it's very important that you pick the right platform and you choose the right cold wallet and make sure that you self-custody it.
Okay, that's great. I think that's another great point, that if you are going to, dollar cost average, you make your workflow, you organize yourself in a way that you're buying it off the exchange, and you have some sort of automation in place where that coins that your Bitcoin that you buy is directly sent to your cold wallet, so that you don't feel, oh, I'll do it tomorrow, oh no, I don't want to do it now, or maybe I'll do it by the end of the week. I think it needs to be kind of a smooth and integrated automation, so that as soon as you buy, no questions asked. It's like, waking up in the morning and brushing your teeth. The Bitcoin is straight away in your cold wallet.
There are applications which, they don't have an option of keeping the coins on the exchanges. Like Bitcoin Well is one, and then Swan Bitcoin is the other. But if you're going to do it by yourself and they're charging you a transaction fee, then I would say that you should probably just, do a lump sum together, because every time you transfer it, you will be paying a fee to it.
Right.
So just keep that in mind. That's the reason I said, pick the reliable platform and then go for it.
That's great. Thanks for that. And maybe we should do a video on how to self custody your own Bitcoin. Maybe another idea for that, for this topic, we could do another session at some point in future. But Varun, can you quickly share with us in terms of, this is dollar cost average in terms of buying? I know you and me were talking, offline. You were saying you heard an example. Somebody's also dollar cost averaging in when they're trying to book some profits in Bitcoin. Can you talk to us about that a little bit, please?
But the reason we need to adapt the dollar cost averaging strategy when we are buying, and we should do the same for selling, because again, emotion plays a very important role when you're trying to book profits. And everybody has got FOMO. If somebody says that, you know what, I'm a Bitcoin maxi and I don't have FOMO, I don't sell it, I don't look at the price, then probably they're just trying to convince themselves. The reason you got into Bitcoin is so that you can buy back your freedom, you can buy back your time. Number one. Number two, the best way to do it in multiple opportunities, because you want to give yourself enough chances, and you don't want to be in a situation that, you know what, I sold too early, or
Mm.
am I selling too late. So to avoid all of that, I would say the best way to do it is do it in such a way that, let's say, you book a little bit of profit and the market bounces back and it keeps going up. At least you're not in that position that, you've booked all your profits. You still have given yourself enough opportunities, enough chances for you to go back and say, you know what, no, I can do a little bit more. So that is going to make sure that your emotions are in control or in check.
That's great. Yeah, that is so true. Because right now, as there is a hype about Bitcoin, because it's approaching, 100K everywhere, everyone, every news channel, every YouTuber is talking about Bitcoin hitting 100K, even though, let me caveat that it's not hit it yet, right? My gut feeling says that, again, I don't want to, predict, but Bitcoin should be hitting 100K very, very soon, sooner than you think, in my definition, based on the price action that I've seen, recently. So, talking about dollar cost averaging, some other ideas are, well, I was talking to a few friends a couple of days ago, and one of them mentioned that the way they accumulate Bitcoin uh, over and above their dollar cost averaging is, let's say they got a gift as a, for example, Christmas gift, or birthday gift, or any extra money, or some months they earn some extra commission in their jobs, or extra bonus. So any extra money, they invest that in Bitcoin. Why? Because they also have a goal for Bitcoin, and the goal is, hey, I want to achieve, let's say, 10% of Bitcoin by the end of 2024, or I want a full Bitcoin, for example. Some people might have that as a goal, and I think dollar cost averaging is a robust way of removing the emotions out of the equation and investing, very consistently, so that you're never timing the market. And as you mentioned, it's the time in the market and not timing the market. But on the other side, if you have any lump sum money here and there, and you wish to invest that based on your Bitcoin goal, that could be another strategy to stack on top of your dollar cost average.
Very well said. I actually just want to add on here that a lot of people, what they do is they over leverage, which I would say one should completely avoid. And also, keep your emergency fund separately. Keep your 3 to 6 months of running expenses separately. Do not go all in. That's very important because, like we're discussing, we cannot time the market. So it's very important that you have your, have your foundation clear, and you're not over leveraged on this Bitcoin subject. That's very important.
Right. Okay. Yeah, got it. And yeah, that's in anything, right? Like, you always have to have that safety buffer in place. We are not giving any financial advice, please do your own research. We just sharing on things that, are top of mind when we speak to people. So yeah, please do your own research.
Vivek, he just recently tweeted that someone has been buying $30 worth of Bitcoin daily for the last 8 years, turning 86,000 to $1 million. Absolutely a legend. Yeah. So this is just one of the results why dollar cost averaging is the best strategy when it comes to stacking Bitcoin. Moving on. Yes, this is Sailor's tweet. He basically tweeted yesterday. This is sailortracker.com is a website where it shows clearly that what is the kind of accumulation has been done by MicroStrategy. And Michael Saylor did mention that we need more green dots. And he just posted this yesterday. And today, he basically just acquired another 55,000 Bitcoin for 5.4 billion at $97,862 per Bitcoin. So now total, they have about 386,700 Bitcoin. And he did mention that he'll be buying the top forever and he's never going to sell his Bitcoin. It is, even if you're a small investor or you're a first timer or you're an institution coming in, I mean, the reason we shared Sailor's, money is because just to show you that he's an institution. I mean, he's a billionaire, and he's the one who's also doing dollar cost averaging. So this could be one of your motivation that doesn't matter what kind of money you put in, dollar cost averaging is still the best strategy.
I know that, that's a great strategy, definitely, because it's got that compounding effect. But I want to talk about how should somebody feel buying at this price point? So for example, we've been looking at Bitcoin. Uh, I mean, you more than me, but I feel I've been looking at Bitcoin price and volatility forever. So I've seen the price at, you know, $21,000, and as early as August of this year when it was trading at $48,000, and now it's almost a double price of $96,000, $97,000. I guess this is the emotion that you were talking about. That somebody who's seen those low prices will be very hesitant and very will resist to buy at this price point. But I guess the DCA strategy is exactly for this kind of scenario where it will take that emotions out and you don't kind of go back and look at, hey, I could have got it for like half the price 4 months ago, and now I'm paying almost double, and I'll just wait it out, and I will buy next year when the price comes down or when the next bear market comes. But little do we know, it might never come down to this price point ever again, right? So
Absolutely.
any thoughts on that? But
See, this is one of the really good examples where, let's say, out of my own personal experience, I can just share this with you and with everyone. That because we are into Bitcoin and there is a reason why we got into Bitcoin. So you have some kind of homework that you do your kind of research, and we promote that one should be doing their own research, right? And you feel that there is potential. So that is why you should keep fluctuating the dollar cost averaging amount. You don't need to keep it same. When it's $20,000, you can increase it to, let's say, $50 if you can afford it, depending on your flexibility and budget. But let's say now, a person like me, even I have those feelings, that I bought Bitcoin when it was 20,000 or 22,000. Why should I be buying where it's, 5 times the price? But you need to remind yourself that the reason we got into Bitcoin is because the system is regulated to protect us, but it is designed to steal from us. And once you understand that, then you will know that you will stop comparing yourself with your neighbor or with your office colleague or with anybody else, comparing that what is the kind of Bitcoin they have. Nobody First of all, nobody should share it. And even if you know that you are way ahead or you're way behind, everybody's got their own journey. So focus on the journey and ignore the short-term noise.
Okay, that's a great piece of advice. Okay, I think that's it on this topic of DCA. If there are any comments, questions that you would like me to cover in our next session to ask Varun or for Varun to talk about, please let us know in the comments below. Thank you and see you in the next one.